This article is coming from Yahoo Finance. By way of Bloomberg, Loonie poised for rally as traders bet on Bank of Canada rate hikes. This is a nice graphical representation of smart money institutions that are short and long. And since about mid 2022, Canadian dollars has been nothing but short. And probably some of that is tied to the drop in oil prices from the highs last year as well, as the Canadian dollar is closely tied to oil prices, as Canada is an oil exporter, and a significant portion of their GDP is tied to oil. So the loonie is well positioned to revisit its strongest levels of the year as traders boast wagers that Bank of Canada will resume interest rate hikes. Chances of a 25% basis point hike at the June meeting rose to 1 in 3, the highest since early March, after Tuesday's unexpected jump in annual pace of Canadian consumer inflation, first such increase since June of 2022. The change in outlook follows a string of solid economic data, including the April jobs report, housing data, and consumer sentiment indicators. Renewed rate hikes from the central bank could finally push the currency above this year's highs. Okay, so we'll look at that. Canadian's policy rate has been stuck at 4.5% since January after Governor Tiff Macklem and his officials left the policy rate unchanged for the second straight meeting last month. They meet again on June 7th. Commodities Futures Trading Commission data shows net shorts in the currency have recently dropped from a 4-year high. That's the chart that we saw up here, and it dropped from a 4-year high, so there are less shorts in the Canadian dollar. Canadian currency could also get a boost from speculative buying as carry trade are unwound. A turn for the better on two other drags on the loonie, falling commodity prices and U.S. debt ceiling angst could also work in its favor. Again, there's a basket of currencies that trade against the U.S. dollar. The Canadian dollar is one of them. So if we don't get a resolution to the U.S. debt ceiling, you should see the dollar drop and the Canadian dollar go up. Commodity prices could reverse their descent if Chinese officials respond to calls for more stimulus. This could call for more demand on oil prices, which would be a plus for the Canadian dollar. There are already bullish signs. The currency 100-day moving average is on pace to close above the 200-day moving average in coming weeks for the first time since October of 2020. So we'll look at that. All right. So we're going to go to the now this is the USD Canadian dollar. It has formed a floor, but we're going to look at and it has been range bound for the better part of 8 months. But we're going to go look at the actual Canadian dollar. And it should mimic, but just in reverse. It should mimic the USD Canadian dollar. So if we just start off at the monthly chart, you can see the Canadian dollar has been range bound again, going back to at least September, August time frame. Now I have marked off a weekly sellers level. This would also be considered a bear trap. Price breaks out to the upside, it's going to be met with sellers, and then potentially price are going to go back down. This is the weekly chart here. Yep. When we open up the monthly chart, we can see the recent October lows at 0.171875. So we could go lower. Forex round hole numbers work out very nicely. Let's put it's going to be around here. But many are saying that the Feds will be done hiking rates shortly, and that's going to put a ceiling in the U.S. dollar, and then you're going to see a decline. And if you do see a decline, then the basket of currencies that trade against the U.S. dollar are going to rise, which means that if price rises, this level may cause a reaction, but then price will breach it eventually, moving higher. Let's go to the daily chart. And this was, you could have just played the range, the extremes. Buy, sell, sell, buy, sell, sell. I'm not the best range bound trader, but let's just say if we were to put on a Bollinger Band, let's just see what would happen. Okay, so I see a piercing. That could have been a short, but I don't see any other piercings. All right, so I'm going to take this off. Actually, I'll just hide it. Just looking to see where RSI was. Oversold, could have went long. Overbought. Overbought. One strategy is you get a piercing or close. RSI is overbought, oversold. You know what to do from there, right? I'm just going to hide that. The article mentioned that the 100-day moving average was close to crossing over the 200-day. So on my chart, the 100-day is this white line, and the 200-day is this yellow line. So they are on the verge of converging. Potentially, you may get a crossover. It depends on what prices do over the next month or two. So there's no setups at the moment. Again, potentially you're going to get a rate hike in June, Bank of Canada. You might also get another rate hike in the U.S. So that should cancel out the rate hike in June on the Bank of Canada. You also should see a debt ceiling resolution that may spike the price of the U.S. dollar, which is going to cause the Canadian dollar to go down. We'll see. Next week should be very interesting. You have equity markets at all-time highs. You have Bitcoin just kind of chilling out. You have a decline in the gold. You have an increase in the U.S. dollar. The euro is declining. Oil is declining. So odds are, at least short-term, Canadian dollar is going to continue to decline. Thanks for watching. Subscribe. Please like the video.